Alrighty, so yesterday I did take a trade actually, but I didn't make a video because it was just like a break-even scalp trade. Um, so I was like up a dollar on the day, so the video was gonna be like 2 minutes long. So I said screw it, I'm not even gonna make a video of it. But we were just sort of running to the upside. If I remember correctly, it was a bit later in the day actually. Let's see. I think it was in here possibly. I don't even remember. Alright, screw it. I think it might have been in here, targeting this high, and I got stopped at a break even somewhere, which, whatever, doesn't even matter. So, just a little scalp. We were pretty much just running straight to the upside yesterday with no real sort of pullback or any sort of structure or anything. So tried for a little scalp. It didn't go directly in my favor. It came back down, stopped me out at break even. Whatever, I'm fine with that. It doesn't matter. Going into today, before the market, I always wake up, like I go to the gym before work, and then I sort of have like my analysis that I put in my journal before I go to work. So this is what we looked like when I was putting in my journal. And I was looking for accumulation, manipulation, and then distribution up to this buy side level, which would also sort of be the seek and destroy model, right? Like London takes out Asia high and low, and then New York takes out London low, and then you would expect the draw to be the high, and then you would also expect us to distribute to the upside, and then since the higher time frame draw is this, that was sort of the setup I was looking for. But we ended up running up to this buy side level, which is the higher time frame draw, and then we formed SMT at the high. So I basically played the opposite. I removed all my drawings, so I'm gonna have to redraw all of them, but I basically played the opposite. So if we zoom out a little bit again, back to the 15, we had accumulation here, so it's just the opposite of what I just showed. We had accumulation, manipulation at the highs, and then this was our distribution back down to the lows. So a very clean AMD model. And the reason why I ended up playing this was mainly confluence from SMT. So looking at ES, or also let's look at ES on the 15 quick. We had this 1 hour fair value gap here, and look at all these lows. 1, 2, 3, 4, 5. Like we had or this wasn't there at the time. It was just this. But this sell side looked so clean to me that like I really thought we wanted to rebalance into this 1 hour, and we never ended up taking that. So who knows, maybe on Monday next week this could be a possible long setup or something. We'll see. But we had SMT at the highs, and something that you see a lot of is so we had this high to here. So the SMT is this to that. So ES is clearly being bullish, a little bit more bullish. NQ was reluctant to take out that high there. And a lot of the times when you see AMD models, or at least in my small amount of experience with trading ICT concepts, the manipulation almost looks like, even though I know this might be an AMD model, it almost convinces even me, someone who's aware of this, that we might run higher. And like, you have this right here, right? Like, huge big candle pushes through this high, and then you sort of consolidate, drop back in, boom, another push. So you're like, in your mind, you're like, this just looks like we're just going to have another bull day, and we're just going to keep running through. And so I think that's the main thing why it's called manipulation. It makes you think we're just going to keep running, and just traps everybody. And so once we had that SMT there, we dropped down, we respected this 1 minute imbalance, and then this 1 minute fair value gap here, right as it got ran through, boom, we came back up and we sort of whipped it. I went short, and this is definitely a bad entry. Right as I entered short, and I like sort of looked at my position, and we were just like right here, and my fill was like right there. I was like, ooh, that's not good, that's a bad fill. And so it sort of made me have to have a little bit wider of a stop than I sort of wanted. My stop was I think right above this candle. I would have rather sort of us come back into it a little bit more, touch it, and kind of get a fill here, right? But I was a little trigger happy, a little sort of like, that was kind of an emotional entry, I won't lie. I was just really confident in the AMD model, and I was just like, we broke through this fair value gap, we inversed it, like, I'm going short. In hindsight, could have been a little bit more patient. So put that in the journal, something to work on. It'll never be perfect. So we ended up coming up, and a good couple minutes of my trade, I was just straight in drawdown. But we ended up, if you look at the bodies and the wicks, we end up respecting this inverse perfectly, this 1 minute order block, and then we ended up selling off. Note what time it is right as we start to sell off, right? Like, this big push happens, and I entered right at 950, right? So boom, you have the big push, a little bit of a retracement, and then boom, still in between that 950, 10 o'clock range, where you expect like that, the sort of macro to start happening. Big push to the downside. And so here, my take profit was London low. And this is like an insane take profit. Normally I'm targeting like 30-40 point moves, right? 107 points is insane. And especially with one contract, because you can't take any partials or anything like that. And I ended up moving my take profit a little bit to the upside, which I'll explain in a second. But we end up having this big push down. I guess this isn't technically your like silver bullet, because the silver bullet's like 10 to 11 o'clock, but I would consider this a silver bullet. I don't know, just because it's right in that like algorithmic time period, but I guess it's not a silver bullet. But anyway, 956 candle, huge candle to the downside, and then that's your like your institutional order flow entry drill type of thing, where you just come in a tick or two and then instantly reject. And we actually never ended up coming up to take these highs. This area was definitely making me a bit skeptical. So if I take the fib here and I draw out our standard deviation, we were holding this -2 to 2.5 area. So originally, right here, right when we wicked this 2 to 2.5 area, like, I wanted to take profit right here. Like, I really wanted to just take it off right here. I mean, that's a great move, right? 47-point move. But I only had one contract, and I was confident we were going to go and have fulfill this AMD model. You know, so this is one of those scenarios, right, where this is why I wish I traded multiple contracts right now, is not for the money. It's so that I could take one contract off, leave my stop right where it is, and now I'm break even. You know, risk off trade, I could just breathe and we're good, you know. At least I booked some profits. Maybe I moved my stop a bit lower, right? And I had some profits for what I you know, for the setup that I entered on. So anyway, sat through, you know, all of this, and as we kept, you know, wicking off these lows, I was thinking, you know, this might become like a low resistance liquidity run to go rebalance into this 1 minute, and we also had a 5 minute that opened up from this candle. I'm not going to switch to the time frame, but this was the 5 minute fair value gap from that candle, which we never ended up touching, the 5 minute. And so as we're just kind of chopping, slowly moving down, I moved my take profit just a little bit to this 4, like it was like 2 ticks above this 4 standard deviation, and I was very confident we would go here, but you know, to me, maybe this was like emotional, maybe this was bad, but I was just like, look, you know, like, this is such an insane move. Like, what's the difference between, you know, $200 and $210? Like, let me just take profit. Like, this is so ridiculous that I'm just holding, not ridiculous that I'm holding through it, but like, it was just such a massive move that I wanted to be out over here, you know, and I was just holding. So you know, I thought this was going to be the draw, but I wanted to just be safe. You know, who knows, maybe we tap the 1 hour and bounce, you know, like, so I just wanted to take profits in an area that I thought we could have some resistance at. And, you know, sometimes you just tap the 4 standard deviation and just bounce. Who knows, maybe this low is protected and we just generate, you know, more sell side liquidity for another date, you know, who knows. So maybe that was a bad move, you know, maybe that was emotional, but that's what I did. So that was the one trade I took. You know, huge trade, so I was like, there's no shot I'm taking another trade. But I was looking at the market, just sort of I wasn't like paper trading, but I was like putting orders, like the drawing, like these, into areas where I wanted to take a trade, as sort of a, you know, just to sort of back test it or forward test it a little bit. And so after we dropped down here into this 1 hour, this 4 hour, and then we started to rally back to the upside going into lunch. You guys know, as I showed you from the beginning, we never ended up taking this low on ES. So there was SMT there, but I was still using this as the draw on liquidity, because although we bounced up here, I was thinking like ES is just going to sort of rebalance to a fair value gap, and this is still the draw. Like, we're still going to come down to this low. So, you know, that wasn't enough to base a trade off of. But if you look at that 1 minute, the standard deviation, during the lunch session, we were rejecting the 2 to 2.5 standard deviation here, and as you can see, We had an SMT here at the lunch highs. ES came and swept those highs. NQ did not. And it was sort of like a sluggish move to the downside. And then, guess what time? Boom, right? So this time is 1:51. Is all of a sudden, boom, displacement candle, right? So just the candle, the sort of scenario, and the time is really what sort of made me want to take a short right here. Just because those like 10 minutes before the hour sort of thing, after lunch, took out lunch highs, you assume drawn liquidity is lower, SMT. We're clearly pushing to the downside. This looks like a clear sell side of the curve. This was the trade that I wanted to take. But even if I did take this trade, I definitely would have gotten stopped out at break even here. Like, once we had this big move down, I most likely would have moved my stop loss to like a couple ticks below break even. Like, this is what I normally do, just just to have like $2-3 or whatever to just cover commissions. So I most likely would have gotten stopped out here. But regardless, this is a setup that I had some conviction in as we were like starting to wick off this. I placed the drawing here, and that was sort of my like paper trade. I was like, all right, this is the setup that I want to take right here. Stop right here, targeting the lunch lows. I'll come back later and see how it worked out, and it worked out pretty well. So that's another setup that you could have taken. And then the last setup that I saw was definitely not nearly as good, but we had an SMT here at the highs. It was like these highs. Still using the ES as sort of a confluence, as like, at this point in time, you think ES is going to sell off to these lows. And again, you're looking at the time aspect, right? So right after 3 o'clock, so it's the start of the last hour of the trading session, we had this big 1 minute fair value gap. We're chopping. Boom, you displace through it. It doesn't really look clean on a 1 minute, I guess. I guess you were still technically sort of holding that, but if you were looking at another time frame, like the 30-second or so, you had a big candle to the downside, and then retraced back into that inverse. So if you got somewhere short up in here, targeting the most recent low, you could have gotten a really quick scalp to the downside as well. For decent model, I don't think it was really good necessarily, because we still, like, we took this low, but using ES as the thinking that, like, the ideology that this is the draw on liquidity as the confluence to continue to take a short even though we took out these lows, I think that's sort of a valid confluence. But either way, like, it was an alright setup, maybe like B tier. I think this is I would say this is like a B plus, and the only reason why I'm saying that is because we fulfilled this AMD model already. The setup in itself, I think, is like an A, maybe. Maybe not an A. Maybe it's just a B plus. But yeah, since we already like fulfilled this whole model and everything, I was like, I don't know about it. I'll just put the drawing there and we'll see what happens. And it ended up working out. So yeah, let's zoom out a little bit and just sort of breathe it in, take a look at it. Very, very clean accumulation, manipulation at the highs, distribution back down to the bottom end of the range. You could also, I think I already mentioned it, how it's sort of like the seek and destroy model, like layered on top of an AMD model as well. So yeah, I thought that was a great setup. Pretty like massive trade. I'm definitely not going to have many of those, you know, like for the most part, like I was saying, I'm targeting, you know, 20 or not 20, like more so at least 30 points on NQ. Usually anywhere from 30 to 40 is sort of like what my trades average to be. You know, it's not every day you see something like this, so you know, don't expect to see plenty of these videos, but you know, I thought it was a great sort of opportunity, and I was willing to capitalize on it and just sort of put stop to break even and just let it run big time. So yeah, it ended up working out in my favor. So pretty good end to the week, but you know, we'll have to see going into next week, into Monday. You know, if NQ breaks below this low, like let's say maybe you know, we have a big fair value gap push to the downside, maybe we retrace, you know, use this 4 hour, 1 hour as inverse, or some sort of fair value gap down here. Maybe we continue to the downside. ES though, I'm really just looking to see what ES does. So if ES takes these lows, you know, you could see a really clean buy model form from these lows. You know, we have so many lows here. If we see some sort of model, you know, like this, you know, I'll look to take a long. So my confluence for this, whatever trade I end up looking for on NQ, is kind of going to come how ES reacts. If ES rips through this, then I'm definitely taking shorts on NQ if the opportunity presents itself, obviously. But if we see buy models in here, you know, that's where I'll look to take longs. But you know, hope you guys made some money today. Great way to end the week on a Friday, and hope you have a great weekend. So going into next week, just gotta stay disciplined, stay locked in, keep the losses tight, and try to stay as consistent as possible. So doing good. So until next time, peace out.